Listen, folks, hope you're excited. I know I am. We're talking about Facebook earnings. Choppy trading after hours so far. We see positive at the moment, started off negative, has flipped to the positive, and now looks like it may be headed towards the negative again. It's rough to see. Now, I'll be honest. I'm going to admit when I'm wrong here sometimes. This is a company I thought for sure was going to be beating. And look, let's just take a look. I lied to you just a little bit, okay? First, we're going to look at stock performance. Over the last year, it's seen an 18% growth. Last 5 years, 150% growth. Very nice success. Last 6 months, not incredible, but really the last month tells a story, down 7%. Pretty rough for Facebook, especially if you look in the last week, where you see a massive dip after Snap missed earnings last week. Let's take a look at these and see what we got. GAAP EPS beat of $3.22. They beat by 5 cents, so nice to see that profitability beat. But this is a big shocker. This is not a company that misses on their revenue estimates. They never do. $29 billion, up 35% year over year, which is still incredible growth rates, by the way. Misses by $510 million, though. In my opinion, that's a fantastic growth rate regardless. Now, the miss, look, I don't think it's a long-term issue with Facebook. It was a very high estimate to begin with, and I think the company's not quite valued where it needs to be right now. We'll take a look at that, though. I'll show you some of those metrics in a bit. Monthly active users at 2.91 billion compared to a 2.92 consensus. Daily active at 1.93 compared to 1.92 consensus. So successful there. Average family service users and average family service users per month again. Per day and per month, both winning on that aspect. So I like it. I do think I would like to show you the they haven't brought out the slides yet, so that's fine. We love seeing the slides because we can see the charts, and we love charts in this place, okay? We love them because they can show you a lot of the user growth a lot easier, but we'll still look at it. So yeah. Let's talk about some of these results here. You see revenue in terms of advertising, obviously the main source of revenue here, coming in at $28 billion compared to $21 billion. So 33% growth there. But what's really nice with this company is the growth of the other segment. So we're talking about shopping, we're talking about Oculus, we're talking about the other avenues that this company has to make money, up 195% year over year. Very exciting. Not quite at $1 billion, but again, $730 million is a lot to me. You and I will take that. I like it a lot. Total costs and expenses rose 38%. Nothing crazy in that aspect. Net income line, I really like to see this. This is where I talk about this company printing money. We're talking about revenuing $29 billion and bringing over $9 billion in net income home. 1/3 of your revenue is freaking net income. That's incredible. That's after all expenses, which is an increase of 17% year over year. That's incredible. This company is able to just produce money like no one's business. EPS rose 19%. It's really nice to see. Daily active users increased 6%, so did monthly. Family daily active people up 11, and monthly active family up 12. Fantastic. They hit all the metrics in that aspect. Really like to see that. Really good to see that. It's really nice. They also repurchased $14.37 billion of common shares in the third quarter. Really nice, and they are still buying back $7.97 billion in the current authorization that they had. So very nice. And they are announcing, which is incredible, a $50 billion increase to the share repurchase buyback. And that's because they know this stock is undervalued right now, okay? It's a good time to rebuy back shares if you're Facebook. It really is, while the stock's undervalued. Good to see it. We'll look at the cash and cash equivalents as well to see what we have going on there. Yeah. I like to see it. Let's see. Beginning of the fourth quarter, we were implementing a new financial reporting system. We got to mention this, which is going to be the family of apps, which is Facebook, Instagram, Messenger, WhatsApp, and other services, and the Reality Labs, which is going to be augmented reality and virtual reality, with obviously augmented reality products like the Ray-Ban glasses they will be working on releasing, and the Oculus. So very nice to see all that stuff as well. Obviously, we're going to take a look here at assets. We love to look at that, okay? Look at that. I just like this net income line. I love it. I love it. You look at 9 months ending. It's increased from $17.9 billion to $29 billion of net income. That's just beautiful. I mean, that's massive increases. 12 billion, well, really it's 11 billion, let's be clear. A little over $11 billion growth in net income in a year. Oh, they're printing money. So let's look at this balance sheet. Total current assets right now sitting at $75.4 billion compared to $75.6 billion. Slight decrease in the cash position. Looks like it turned a little bit more towards accounts receivable. Nothing crazy there. Total assets in general at 169.5 compared to 159.3 billion. So massive balance sheet on this company, as you might be able to tell. Total current liabilities, we're going to get into those here, 17.8 compared to 14.9, and liabilities in general at 36.2 compared to 31. So assets rose by twice as much as liabilities did over the last 9 months. So we're talking about equity rising to $133 billion versus 128. Now this is a premier balance sheet. I don't think there's any other way to say it. We're talking about $170 billion on the balance sheet, and 133 of that is equity. I mean, 133. That is ridiculous how fantastic this balance sheet is compared to any other company out there. Just being clear. This is a premier balance sheet. Other companies really should be emulating this because it's quite incredible. No staggering amount of long-term debt. It's nice. It's really nice. So again, we talk about valuation on the stock, and you look at Facebook now after this dip, which it's up after hours, which I think is fair. I predicted this one to beat as far as at least go up after hours, which so far it's doing that. This thing was trading at a market cap of 24 with growing revenue 30% year over year. Billions of dollars of growth and net income growing by billions. A market cap of 900, not even $1 trillion market cap. That's fair. It's expensive, right? This is a company that's going to be bringing in over, let's see, I think it's $110 trillion is what they're going to bring in this year. Let me just confirm that real quick for you. I believe it's $110 billion this year. I'm stupid. $119 billion, according to estimates, which obviously we'll see what that looks like. $119 billion they're bringing in this year, but they're trading at a market cap not even $1 trillion. That's less than 10 times the amount, which is dirt cheap for a company that is bringing in 30% revenue increases. And even the year following, they're expected to grow 20% on top of that. So this is a company trading cheap. Forward PE ratio, obviously even cheaper. We're talking about a 20 forward PE ratio on this company. Ridiculously cheap. It's a cash producing machine. I love Facebook at these levels. Anything really under $350 I love, because I think this is a stock that right now should be worth $400. Let's just be clear, it hasn't reached that. We're talking about a 52-week high of 384. I think it should have kept on that train. But look, we can't all be correct here. But it should have stayed up here. This nonsensical dip of over 13% since their high is, I think, a little ridiculous. I mean, they're $60 per share away from their 52-week high. I think this is a cheap stock right now. Just being honest, I think it's a great long-term hold. Hold it for 10 years. You're going to love everything you've done with it. Have a good one.